Hello traders and welcome back to the channel. Maximize your return with 4 golden trading strategies using RSI, MACD, Bollinger Band, Stochastic, unbalanced volume and moving averages. Today in this video I would like to present a powerful trading strategy to buy and sell stock that will help you maximize your returns. These powerful indicators are a complete toolkit using in this video for making informed decision in the stock market. So please sit back and relax and let's get started. The first golden trading strategy using MACD and moving averages to buy stock. This is a for you stock D1 time frame of finance. In this graph, I installed MACD indicator with 12.26.9 parameter and also two moving averages, namely SMA 20 as a fast moving average indicated with the red color and SMA 50 as a slow moving average indicated with black color. We can use both MACD indicator and also moving averages to identify trends in the stock prices. When MACD line, the blue line, be above the orange line, the signal line, and the histogram bar be above the zero line, it is a sign that the stock is bullish and the trend is upward. Additionally, if the short-term moving average SMA 20 crosses the slow moving average SMA 50 while going upward and the price be above the 2, it is a strong bullish signal and a proof of further confirmation to enter the trade. So you can enter the trade at the close price of this bullish candle above the crossover and a crossover and MACD indicator, and put 180R below the close price for stop loss and put 2, 3 or 480R above for profit target. So this is how you can enter the trade using MACD indicator and moving averages to maximize your return. The first golden trading strategy using MACD and moving averages to sell stock. This is ARX stock D1 time frame of finance. I installed MACD indicator with 12.26.9 parameter again. And I also installed two moving averages, SMA 20 and SMA 50, as a fast and slow moving averages. We can use MACD indicator and moving averages to identify trend in the stock prices. When MACD line, the blue line, crosses the orange line while going downward, and the histogram bar be below the zero line, it is a sign that the stock is bearish. Additionally, if the short-term moving average crosses the slow moving average while going downward and the price be below the two of them, the two moving averages, it is a strong bearish signal and a proof of further confirmation to exit the trade. If in these three candles, if you blend these three candles with candlestick math blending, the outcome is nothing but a strong bearish shooting star, which again that's a sign of trend reversal and the trend is going downward. So these three, it has a good proof that you can exit the trade safely. So you can exit the trade at the close price of this bearish candle and put 180R above for a stop loss and put 2 or 3 or 480R below for profit target. So this is how you can use MACD indicator and moving averages to exit the trade or sell stock. The second golden trading strategy that I'm going to talk about is RSI and moving average to buy stock. In this graph, ARX stock D1 time frame of finance, I have installed the RSI indicator with 14 days period and a long-term moving average with 200 days period. The slow moving average SMA 200 is used to identify the trend. When the stock price is above the SMA 200, it signals a bullish trend or an uptrend. And you see, the RSI is considered as oversold. When it's below 30, you see that RSI here, it's set as 20. To buy a stock, traders look for oversold condition like this, such as RSI below 30, and a bullish trend such as the price be above the SMA 200. These are a strong bullish signal and a proof of further confirmation to enter the trade. So to enter the trade, you can enter the trade at the close price of this bullish candle, which is above the SMA 200, and put 1 ATR below for stop loss, and put 2, 3, or 4 ATR above the close price of this bullish candle for profit target. So these are the information for this bullish candle, and this 28 is the RSI value for this bullish candle. So this is how you buy a stock based on RSI and SMA 200. The second golden trading strategy is using RSI and moving average to sell stock. In this graph, ARX stock D1 time frame Yo Finance, I have installed the RSI indicator with 14 days period and a long-term moving average with 200 days period. The slow moving average SMA 200 is used to identify the trend direction. When the stock price be below the SMA 200, it signals a bearish trend or downtrend. The RSI considered as oversold when is above 70, which you see it is. To sell a stock, traders look for oversold, overbought area or overbought conditions such as RSI above 70 and the stock price be below the SMA 200. This suggests that the stock price is reversing downward and you may exit the trade. To exit the trade, you can exit the trade at the close price of this bearish candle and put 1 ATR above for stop loss and 2 to 4 ATR below for profit target. You can install ATR indicator to see the value of this, the ATR for this bearish candle. So this is the information for this bearish candle, and also this is the RSI value for that bearish candle. So this is how you sell a stock based on RSI and SMA 200. The third golden trading strategy using Bollinger Band and unbalanced volume to buy a stock. This is Apple stock D1 time frame of finance. To buy a stock based on Bollinger Band and unbalanced volume indicators, first we have to set up the Bollinger Band with 20 days simple moving average and 2 standard deviation. Now, first we have to watch for the stock to trade outside the lower band, you see the price is coming down, and exit the lower band and trade outside the lower band. Uh, so which indicates bearish signal and the stock is in an oversold condition. Next, we check the unbalanced volume curve to confirm that buying pressure is increasing. If the unbalanced volume curve is rising, it suggests that the stock price may be due for a bounce up. As you see, the stock bouncing up all the way up. We have to wait for this bullish candle to form. Then we enter the trade at the close price of this bullish candle and place a stop loss 180R below the close price to limit risk, and set up profit target 2 to 480R above the close price to capture potential gain. This is how you use Bollinger Band and unbalanced volume to enter the trade. The third golden trading strategy is using Bollinger Band and unbalanced volume to sell a stock. This is the same Apple stock, D1 time frame EO finance, to sell a stock based on Bollinger Band and unbalanced volume indicators. First, we have to set up the Bollinger Band with 20 days simple moving average and 2 standard deviation. Then we watch for the stock price to trade outside the upper band. You see that the price is rising up and exiting the upper band and trade outside. It suggests that the stock is in overbought condition and generate a sell signal. Next, to check the unbalanced volume curve to confirm that the selling pressure is increasing. If the unbalanced volume curve here decreasing or falling down, it suggests that the stock price may be due for a bounce down, and you see that the price is bouncing, going up and bounce back down and fall down. So we have to wait for the close price of this bearish candle, and we exit the trade at the close price of this bearish candle and put 180R above for a stop loss and 2 to 480R below for profit target. So this is how we use Bollinger Band and unbalanced volume to sell a stock. The fourth golden trading strategy is using a stochastic indicator and SMA 100 to buy a stock. This is RY stock, D1 time frame EO finance, to buy stock based on the stochastic indicator and SMA 100 on a daily chart. First, look for the slope and position of the SMA 100 to identify the trend. If the price is above the SMA 100, it suggests an uptrend. You see, it is an uptrend. Next, wait for a pullback in the direction of the trend and wait for the stochastic indicator to become oversold, which is when it fall below 20, and you see that it is below 20. Stochastic notify traders the trend reverses its direction a moment before it happened. Once the stochastic crosses above the 20 while going upward, here, it generates a buy signal, indicating that it is a good time to enter the trade. We also see the formation of this bullish hammer that suggests the buyers are step in and want to push the price higher and generate a buy signal. So to enter the trade, we can enter the trade at the close price of this hammer and put 1 ATR below the close price of this hammer for stop loss and 2 to 4 ATR above for profit target. And this is the information for this hammer. So this is how you buy a stock based on a stochastic indicator and SMA 100. Finally, the fourth golden trading strategy is using a stochastic indicator and SMA 100 to sell a stock. This is CME stock, D1 time frame you own finance, to buy a stock based on the stochastic indicator and SMA 100 on a daily chart. First look for the slope and position of the SMA 100 to identify the trend. If the price be below the SMA 100, it suggests a downtrend. Next, wait for the pullback. For this pullback in the direction of the trend and wait for the stochastic indicator to become overbought, which is when it rises above 70, and you see that is above 70. It's above 70 line. Stochastic notify traders the trend reverses its direction a moment before it happened. Once the stochastic crosses below 70, going downward, it generates a sell signal. And you see the trend is going down too as well. You see the stochastic indicator going down. So that is the good time to exit the trade. You see here we have this evening star reversal pattern. That is suggesting that the bearish pressure step in and want to push the price lower. That is again indicating that's the good time to exit the trade. So to exit the trade, we can exit the trade at the close price of this bearish candle and put 1 ATR above for stop loss and 2 to 4 ATR below for profit target. So this is how you can sell the stock based on stochastic indicator, SMA 100, and entry trigger evening star reversal chart pattern. The four golden trading strategy to buy and sell stock described in this video are a combination of technical indicators such as RSI, MACD, Bollinger Band, stochastic, moving averages, and unbalanced volume that are widely used by traders to maximize profit in the stock trading. These strategies, when used in combination, provide a comprehensive approach to buy and sell stock and are known to be some of the most profitable and effective strategies for maximized return in stock trading. That's all, folks. Thank you for watching. I hope you enjoyed this video. I wish all my viewers good luck, and I would appreciate if you would subscribe to receive notification for upcoming videos. That way you won't miss anything.
That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.